Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, India is the accident capital of the world with a person dying every 90 seconds. According to the National Crime Records Bureau, 3,94,000 Indians died in accidents in 2012 alone. While more than 35% of these deaths were due to road accidents, people also expired due to train accidents, drowning, fire, electrocution. Lakhs more, of course, are injured or disabled for life. Now, chances are high that you already have some insurance policies like health and motor and feel absolutely protected. But look into buying a personal accident policy because it plugs an important hole in your insurance portfolio. Now, to understand and to help us understand this better, we've got Yashish Dahiya with us, CEO and founder of Policy Bazaar. Welcome to the show, Yashish. Now, to me, it seems that personal accident cover is so important. But we were talking about the fact that virtually no one in this country has it.
Yeah. There is. Personal accident cover is never sold, so nobody comes to you and kind of gives you personal accident cover. It's a very low cost cover, so somebody can get a cover of, let's say, 20 lakh rupees for maybe less than 100 rupees a month. Now, of course, nobody's going to make money in something which is going to cost only 100 rupees a month, and hence nobody's really interested in coming and kind of giving this product to you and for the consumer to buy this product. The consumer has to go and buy this. See, when we talk about this number of accidents, yes, India has the largest number of deaths because of accidents. But I think the far more important part is it's not just deaths, because deaths do get covered by term insurance cover also. And some people, thankfully, have started buying term insurance cover in some numbers. I think a lot of people get disabled. So I'm sure there isn't a stat out there, but if you look at the disabilities, they are a lot higher than the deaths in accidents. Somebody loses a finger, somebody loses a hand, somebody goes blind, somebody loses eyesight of one eye, somebody loses a limb. All these disabilities, whether they are permanent or temporary, can cause major financial havoc for any individual. And the sad part is there is a story in each of these statistics because, of course, one person dying every 90 seconds is a number which is scary enough. But what actually happens when that happens in the family? I can tell you from personal example. We had one individual who was joining the army, had gotten through to the NDA long back. This is somebody of my father's age. This was Holi. They were jumping over the fire, and their leg somehow got stuck and it got burnt. And of course, NDA is not going to accept you once you've got disabled. And they could not find very gainful employment. They found something, but that employment was much lower than they would have had. And what that did over a generation is put that individual's family so far behind in a generation compared to the other families that they were peers of. That's unbelievable. It's totally unbelievable. And I think that in Asian context, where everybody is trying to grow within one generation, go from one level to the next, from lower middle class to middle class to upper middle class, have a bigger house, have a better lifestyle, get more education for their children. In that situation, having a disability of a permanent kind or even a partial disability for a while can be very devastating for the families. And hence it's very important to get this covered, specifically when it costs less than $100.
Right, Yashish. Now, why are we as Indians so reluctant to take personal accident insurance? Now, you've talked about the importance of it. You talked about the fact that it's not an expensive cover. For a few hundred rupees, you can cover yourself for a couple of lakhs. Why is that reluctance there? And also, explain to our viewers how it's structured, lucidly how it's structured and how it benefits a family if something does go wrong.
Sure. So, first of all, I think we as a populace owe it to ourselves to mature in terms of risk planning. So we have not really matured as a country in terms of how we buy.
So what you're saying is that we ignore risk planning in our lives.
We ignore risk planning in our lives. So nobody was ever buying plans for life cover or for disability cover. It is only now in the last 3-4 years that people have, at least because of the advent of online term, people have at least started buying online term. People have started buying health insurance. I think the next stage is critical illness and personal accident. And now, what does a personal accident policy cover? In case there is an accident, whether because of a road accident, whether because of a fire, whether because of whatever the reason may be, if there's an accident, then in that accident, if there is a disability or if there is death, in both cases, the entire amount of the personal accident is paid in the case of death and in the case of total permanent disability. Now there are there are three ways to look at disability. Disability can be either total or partial, and disability can be permanent or temporary. If it is a permanent disability, then one needs to see how significant is the disability. Disability starts from the loss of one finger and keeps going all the way till one has lost two limbs or one has lost their eyesight, which is both are called total disability. And a percentage of your total claim amount is paid basis the level of disability. So if somebody has a 20 lakh rupee cover, which is going to cost them less than 100 rupees a month, if they have a permanent disability and a total disability, as in they lose two limbs or they go blind or something of that sort, the entire 20 lakh rupees gets paid right away. In case there is death, the 20 lakh rupees also get paid. If they have lost one hand, unfortunately, they will probably get paid about 10 lakh rupees. If they've lost one finger, they probably get paid about 3-4 lakh rupees. So it depends on how significant the disability is that the amount gets paid. Now, in case the disability is of a nature which is temporary, so a fracture, somebody's had a fracture on a leg, then they can get paid up to 5,000 to 6,000 rupees per week for a period up to 2 years. So they can keep getting paid for up to 2 years. So
it basically covers all the eventualities that you might face while, say, driving a car or walking on a...
Absolutely. And now, disabilities happen most to people between the ages of 26 to 40.
And that's the critical part.
And that's the critical part. So between 26 to 40, I think it's necessary to take out a personal accident cover. These plans are available both as riders and as standalone plans. While riders are okay, riders are usually very small in nature, in the sense they'll cover you for 1 lakh rupees or 2 lakh rupees. If one wants a proper disability cover, which covers them fully and for a significant amount, one should go and take a standalone cover. The best part about this cover is it does not require medicals. It's an over-the-counter product, because see, you cannot plan to get disabled into the future. So one cannot really plan to get disabled, and hence no checks are required. Whether one has a medical condition, etc., does not imply they're going to get disabled. So through an accident. So because accidents are by nature, you can't predict them.
This pretty much covers the whole gamuts of accidents, whether you are in a car, you're walking down the road and you're hit by someone, virtually every aspect of life where an accident takes place.
Any form of accident.
A lot of people confuse this with personal accidents that take place when you're sitting inside a car.
If one is, so as I walked into my house about 10 days ago, there was some grease lying there and I slipped and I fell. And yes, if I had broken my leg, that would be covered under personal accident. So a fall, electrocution, one goes into, many times we have these loose connections. Any form of accident is covered under these plans.
Right. So what doesn't it include before we go into other aspects of personal accident insurance?
So any planned, self-inflicted, suicidal kind of activity which you bring on yourself is not going to be covered, because naturally, it's pretty obvious why that's not covered. If one is intoxicated, drunk, into drugs, and in that is hallucinating, and because of that something happens, that's not covered.
So what should the ideal amount of a payout, not a payout, I mean the cover should be? And also, tell us about the process of payouts. Is it a cumbersome process? Because that's another thing that people are always concerned about.
The awakening to payouts is a very important piece that's happening in India, and I think we should look at about 12 to 15 times your annual income, as long as you're in the age band of 26 to 45. So very similar to a term insurance, because total disability has exactly the same financial impact, or actually worse financial impact, than death. Because in death, the individual is no longer there to be taken care of, but in a total disability, the individual obviously loses their ability to earn money, but more importantly, they have to be taken care of as well. So in term insurance, we talk about 10 to 12 times, and this is about 12 to 15 times cover. So if a person has an income of, let's say, 7 lakh rupees, I think a cover of something like 75 to 80 lakh rupees to even a 1 crore cover makes a lot of sense for them. Now, remember, that cover is not going to cost more than 500-600 rupees a month. So these covers are not expensive. These covers are fairly straightforward. They are over the counter. Unlike a term and health where you have to go through medicals, there's a cumbersome process. Out here, you go, pay, take your plan, walk away.
And there are no age limits. And
there are no age limits. You can take it at any age.
so what are the kind of plans which are available, and what do they typically cost, and what should one look out for in a personal accident plan?
See, both general insurance and life insurance companies have these plans. Life insurance companies mostly have them as riders. General insurance companies, in the motor insurance plan, they usually have these available as riders. You can take up to a 2 lakh rupee cover for the first driver. Most people take a 2 lakh rupee cover for the first driver, but they forget to take it for the additional drivers, as if the additional drivers' lives are not, sorry, the additional co-passengers, as if their lives are not important. See, it's not that we think that their lives are not important. It's just that we don't think that a cover is available. We're not aware of it, that there is a cover out there which can cover an individual in case there's a disability. I think it's a lack of awareness, and as you know, we're all working hard to build that awareness. So if people start buying it, companies will also invest more in kind of getting that awareness. Now, most companies, general and life, have these products. As I said, 20 lakh cover will cost about 100 rupees a month. They are available from pretty much every company. So I can't think of a company that doesn't have a personal accident cover.
So what are some of the areas that people need to watch out for, as far as what are the exclusions for a personal accident cover?
See, if you have a disease, if you have a health disease,
we looked into that question
a
little bit. But
this is not in any way, shape or form either a substitute for term insurance, because death does not happen only from accidents. Death happens from many other reasons, including illnesses. There are lots of reasons. Now, so this is not in any way that you don't need to take a term cover once you have this cover. In no way is it a substitute for health insurance. So it's not going to cover the same things as health insurance, in the sense, if you go to hospital and you stay in hospital for 10 days or 20 days because of a disease, if a disability happens because of your hospitalization or because of illness, that is also not covered. This is specifically only covering accidents, which is a large proportion of all disabilities. But remember, these disabilities are not covered by health insurance. They are not covered by term insurance. So it is a very specific thing that in case there's an accident, sudden impact, sudden accident, sudden violent act because of which an eventuality occurs, personal accident covers essentially cover those. And there is pretty much no other cover that covers those. So if one has a road accident, a lot of that part of getting you back or to work is not included in many of the health plans.
To the insurance portfolio that you have, Yashish, we've been talking about personal accident covers. In terms of the insurance portfolio, where does that stand in terms of priority, in terms of how much importance you give to it?
So from a risk perspective, there are 4 plans which are a must-have for almost any individual, specifically if they have dependents. The first one is the death cover, which is the term insurance. The second one, I would say, is the critical illness cover, because a lot of critical illnesses are there in this country. So India is the world capital for critical illnesses and personal accident. So critical illness needs to be covered. Personal accident is the third cover that needs to be there. And health insurance is the fourth cover that needs to be there. So I think these 4, in whichever order one buys them, whatever they're comfortable, I think these 4 need to be covered. So the most important part is, let's take a very simple example. If somebody is earning 10 lakh rupees and they take these covers to the extent required, let's say they take a 10 lakh rupee health cover, they take a 20 lakh rupee critical illness cover, they take a 1 crore term cover, and they take a 1 crore disability cover or death, a personal accident cover. All of these put together will not cost more than 40,000 rupees in a year, which is about 4,000 rupees a month, or roughly about 4% of their salary. So in 4% of your salary, one can cover pretty much all the costs that are out there. There are a lot of things that we spend 4,000 rupees on. I think this is a must. We spend 1 lakh rupees going and buying some plan which you don't even understand, which after 3 years we cancel. Let's stop doing that. Let's start getting these plans. And once you've done this, one of course needs to think about pension. One of course needs to think about child cost planning. So I think those are the next 2 plans that come in.
So does it make sense buying a personal accident cover individually as general insurance or as a rider? Because riders are being also sold across the platforms.
See, riders, as I mentioned earlier, riders are very minimalistic in size. So it's very difficult to get, let's say, a 1 crore cover as a rider. So I would certainly advise this is a plan that needs thinking, and you should buy it as a standalone. I'm not in any way dissuading you from buying riders at all. If you're not buying anything, buy a rider. But the point is, rider will not be sufficient. Rider will be quite minimalistic in its approach.
Right, it's now time for consumer questions. We've got Abhishek from Gurgaon who's written, I'm 33 years old and I want to retire by 45. I want to go for a pension plan which can give me 30,000 rupees per month. Please suggest a suitable pension plan, risk-free, he asks. And how much premium do I need to pay per annum and for how many years?
So by saying risk-free, it automatically means Abhishek is looking for a low return product, because risk and return go hand in hand. Over a long period of time, of course, risk does not really play out. Over a long period of time, most market-based products give a good return. Now, coming to the base question, you're looking at a product which would pay you 30,000 rupees per month for life. To organize that kind of money, 30,000 rupees per month, you need about 3 lakh rupees, 3.5 lakh rupees of income per year. Also, let's say you want some inflation adjustment because you want to have it growing over a period of time. So my sense is you need about 60 to 70 lakh rupees of corpus to be available to you by the time you are 55, so that you can afford such
in
a
fact,
payout.
He wants to retire at 45.
Yeah, he wants to retire at 45. Yeah, you want to retire at 45. You need to have about, say, 60 to 70 lakh rupees of corpus built by then. Now, if you want to build a corpus of 60 to 70 lakhs within a period of 12 years, you've got to start investing, according to me, about 2.5 lakh rupees a year at least. And you got to do that on a pretty aggressive market-linked basis. If you want to go with the guaranteed product, then I don't think you would manage to achieve that by investing anything less than 4 to 5 lakh rupees every year. So about 4 lakh rupees a year is required if you're going with the guaranteed route, and about 2.5 lakh rupees a year is required if you're going by the low-cost ULIP route. So I would certainly advise a low-cost ULIP, because please understand, over a long period of time, what seems like risk on a day-to-day basis, when you see the markets moving day-to-day, over a long period of time, they don't appear as risks. So if you think about where the market was 12 years ago, let's say 2012, 2013, the market was at about 3,000 points. Today it's at 25,000 points, it's 8 times. Many people don't see this. Many people look at real estate and they think that real estate is growing very fast. 1979 is when the stock market started. It was at 100 points when it started. Today it's again at it's 250 times that over the last 35 years. So markets will give you a better return than most other investment formats over a long period of time. Since you're investing for 12 years, I'd certainly advise go with the markets and invest about 2.5 lakh rupees every year, or about 20,000 rupees a month. There are lots of plans out there on the low-cost ULIP front. You've got plans from HDFC, you've got plans from Aviva, you've got plans from ICICI. You've got lots of companies offering low-cost ULIP plans, and the best benefit of these is you get a tax-free return when you get the money. If you take a pure pension plan, you'll be paying taxes when you receive the money. But in a low-cost ULIP, you won't be paying taxes when you receive the money.
Right, we've got Abhay Vashisht from Mumbai. He says, is it not a better idea to prepare a medical fund by investing in some gold or debt-oriented mutual funds than paying a hefty premium for a health insurance policy? He says, I'm paying 6,000 rupees per year to National Insurance Company for just 2 lakhs of cover for my wife and daughter since the last 5 years without any claim, while I doubt the company will pay any claim. So he's got a doubt in his mind whether the company is actually going to pay up if the need arises. Now that's a thought that crosses a lot of people. Does that really work?
No, it doesn't. It doesn't work. I'll explain why it doesn't work. It's very good that you don't have to claim. It's a very happy situation that one doesn't have to claim. Once one has to claim, one has to claim repeatedly. So 70% of all costs in medical in health per se are because of chronic diseases. Once these diseases come, they cause a cost every year. So if you build up a corpus of 2 lakh rupees, let's say, you say that paying 6,000 rupees is not worth it. So I build up a corpus of 2 lakh rupees. Now the first year this disease hits, in the first year the 2 lakhs gets used. What about the next year? The life is long. One may live with that disease from the age of 42 till the age of 80. For 38 years, every year spending 2 lakh rupees is a very significant amount. If you had the health insurance cover, today the policies you are getting, and that's why I keep insisting, please buy policies with no claims-based loading. Because if there is no claims-based loading, you cannot be individually penalized for claiming every year. So remember, a health insurance policy is not a 2 lakh rupee policy. It's a policy that gives guaranteed renewability for life. If it has no premium-based loading, it cannot harm you because you've been claiming. And so what that means is for the same 6,000 rupees, and it will obviously go up with age, maybe you end up getting a 80 lakh rupee cover if you claim every year for the next 40 years. That is what a health insurance policy is for. And that is exactly why it is very different from a corpus. So please take this idea of building a corpus versus having a health insurance policy out of your mind. It is to cover those risks if they happen. And please stay very see, insurance is to be used. So there's a statement that says insurance is somewhat against the gods. So when something bad happens to an individual, that's when insurance comes in handy. If something bad doesn't happen, that's great. We don't have to feel bad that we're not claiming. It's fantastic if we don't have to claim. Some unfortunate person has to claim, and for them the insurance policies, hopefully they've taken one. And for some really unfortunate people, they don't even have the insurance policies. There's nothing there, and they just have to keep. That time they really look for an insurance policy because the corpuses don't help.
Right, Yashish. Now that's all the time that we have on this show of Policy Bazaar. Thanks for joining us. But do write your queries to ask.policybazaar.com or tweet us at Twitter @PolicyBazaar_in, and we'll see you shortly with another episode of Policy Bazaar. Goodbye.